Everybody, this is Chuck Hughes, and welcome to our continuing series of educational webinars. And today we're going to focus on current market trends, and we're going to discuss strategies that have been working well this year in this slow-growing economy, deflationary world economies that we've been experiencing this year. And what I've been doing this year is focusing on stocks and companies that are doing well in a deflationary environment, and also in a slow growth or no growth environment like we've had this year throughout the whole world, actually. And we have been able to realize good profits this year, focusing on these companies. So not only we'll be looking at not only technical analysis but also fundamental analysis, because that's what's working this year. You want to pick companies that do well in this type of an environment and either purchase the stock or purchase a call option or an option spread. So this fundamental analysis is part of our overall analysis, and that's enabled us to profit well this year. So I like to call these stocks the super portfolio stocks. So we have a stock portfolio that has these super portfolio stocks, and we also have an option portfolio. And we trade options on these super portfolio companies, and we also have a super portfolio spread strategy in addition to the stock purchase and the option purchase strategy. So there's a total of 3 strategies that we utilize with these super portfolio stocks. And first we do our fundamental analysis on these companies, and then we do a 3-step technical analysis on the companies, and we use our three-step technical process that I've been using for many, many years. So we start with the fundamental analysis, and then once we find a company that meets our fundamental criteria, then we want to do our 3-step technical analysis, and that allows us to narrow down the list of stocks to the stocks with the very best profit potential. And that's a 3-step process, been working for decades for me, and we continue to use that in combination with our fundamental analysis. So now one thing you want to avoid in this type of market environment are growth stocks with high PEs. They're just getting crushed this year, and I'm just throwing out a couple examples of stocks that would fall into this category. There's quite a few stocks in this category that just don't do well in a slow-growing economy, with European economies going into recession, China and Asia really slowing down their growth rates, U.S. very slow growth rate. It's just throughout the whole world, we just have a deflationary, slow growth type of environment. So these types of growth stocks with high PEs just have not been doing well in this type of environment. Green Mountain Coffee, Deckers, and you can see from these price charts how they've been crushed over the past year. Here's First Solar, Acme Packet, and there's quite a few of these growth companies that depend on real growth in the world economies, and we're just not getting that now. So here's a list of the typical fundamental characteristics we look for with these companies. We want to see companies with good balance sheets, with low debt levels. That's important in this type of environment. These companies should not be dependent on the price of oil or the price of commodities, in a deflationary type environment. We want to see companies that have stable growth rates in a slow-growing U.S. economy that pay a dividend, which can help act as a floor during market declines. And also, we want to focus on the companies that have little or no correlation to the European debt crisis, which it's affected the U.S. markets over the last several years. So we want to try to focus on companies that aren't vulnerable to this European debt crisis, because at any given moment, this can reappear and knock stocks down. So we want to focus on those stocks that don't get hurt as much when these flare-ups occur with this European debt crisis, which is ongoing and which will probably continue for some time. So we want to try to avoid companies that are heavily exposed to problems with the European debt crisis.
Chuck, a question from one of our attendees. Have you found that yourself and perhaps other financial authors are using more of a qualitative analysis as opposed to quantitative regarding charts and stuff? Or have you found yourself having to mix that up as well?
Yeah, that's a great question. This year, Tom, you have to mix the fundamental in with the technical in selecting these companies, because it does make a big difference this year. So normally, in a bull market that lifts all boats, you can use your technical analysis, find plenty of opportunities in a roaring bull market. But in this type of environment, you want to combine that with the fundamental analysis, and that has really made a difference this year. So to answer your question, we're using both to find the best profit opportunities. Okay, let's look at an example of one of these super portfolio type stocks. This is Apple. This is a price chart of Apple. And I also put the Keltner channels in with this price chart. And we're going to go into more detail on these Keltner channels in a minute, but I just wanted to point this out to people. We have the upper Keltner channel here. Then we have the price action, daily price action of Apple stock. And then we have the middle channel, which is this dotted line, and then the lower channel. And I just wanted to point out with this chart that we're on what I call a high probability buy signal for Apple right now, because the price of Apple stock actually closed below this lower Keltner channel. And whenever that occurs, we're on what I call a high probability buy signal, because this usually sets up for a very powerful rally. You can see the last time we had one of these signals was last November of last year, and you can see where Apple stock actually closed below this lower Keltner channel, and that set up a very, very powerful rally. So we're on this high probability buy signal right now with Apple, because it recently closed below that lower Keltner channel. So we'll go into that in more detail. So here's a typical super portfolio stock, Apple. Apple has a great balance sheet with lots of cash. It's not dependent on the price of oil or commodities in a deflationary environment. It has a high growth rate in a very slow-growing U.S. economy, and it now pays a $10.60 dividend and has little or no correlation to the European debt crisis. So these are the typical characteristics we look for in these super portfolio stocks, and that's what has enabled us to outperform the markets by a wide margin this year by focusing on these stocks that are doing well in this kind of environment. And here's a snapshot of my Apple stock and two of my retirement portfolios. Currently have $161,000 open trade profit for Apple. And here's another example of a super portfolio stock. This is TJ Maxx, the retailer, and you can see from the price chart, it's been doing well. It's trading down around 29 last December. That's about the time that I started purchasing TJ Maxx, and I also recommended that to my advisory service members. And we have several option positions on TJ Maxx. So you can see it's had a nice rally from this $29 price point up to around $44. And TJ Maxx has those typical characteristics of a super portfolio stock. It has a good balance sheet, not dependent on the price of oil or commodities, has a high growth rate in a slow-growing U.S. economy, pays a dividend, and has little correlation to the European debt crisis or the world debt crisis or world slowdown. So, and I currently have about $75,000 in open trade profits for TJ Maxx. So once we find a company that has these characteristics, fundamental characteristics, then of course the next step is to use our technical analysis to select from these companies the companies with the best profit potential. And as I mentioned, this three-step technical analysis has worked for many decades for me, and or many years and several decades for me. And step one is we use our trend following systems to determine the price trend. Step two, now in any given day you're going to have a lot of stocks that are in a price uptrend. So the goal of step two and step three is to narrow down that list and find the stocks with the best profit potential. So step two is to confirm that price trend, and we use several confirmation indicators that we'll discuss here briefly. And step three is to use the Keltner channels to determine our entry point, and that's a big part of this whole process, because you want to find a low-risk entry point if possible, and that really increases the odds that your trade's going to be profitable. So with step one, we use the trend following system, the 50 and 100-day EMA averages to determine the price trend. Once we determine that, if we have a price uptrend, we buy stocks and call options and option spreads. And then if we're in a price downtrend, we sell stocks, we buy put options and put option spreads, and we also buy bearish ETFs. So we want to determine the price trend first to determine whether we're going to be buying or selling a stock or buying call options or put options. So here's a snapshot. This is a price chart, daily price chart for Apple, and this blue line is the 50-day EMA line. So we want to take a look at the 50-day EMA, and then we want to compare that to the 100-day EMA, and that is our EMA trend following system. So when the 50-day EMA, which is the faster EMA, when that's above the 100-day, then that stock is on a buy signal. And then when the 50-day EMA crosses below the 100-day EMA, then that stock is on a sell signal. So pretty simple system. And what I like about this is if you go on to stockcharts.com, there's quite a few financial websites that offer this 50 and 100-day EMA lines. If you bring those up on a price chart, then you can instantly tell whether that stock is on a buy or a sell. So it gives you an instant picture of whether you should be buying or selling. So here's a price chart, daily price chart for Apple stock. Here's the daily price movement. And then we have the 50-day EMA, which is the blue line, and the 100-day EMA. And we can see in April, the 50-day, which is this blue line, it crossed above the 100-day EMA. So Apple was on a buy signal at this point here. And as long as that 50-day EMA line is above the 100-day EMA, then Apple remains on a buy signal. And here's an example of a sell signal. This is for Merck. And in this example, in February, the 50-day EMA crossed below the 100-day EMA. You can see right here. And then Merck stock was on a sell signal. So if you owned the stock at that point, you'd want to sell it. And you want to exit your long positions because once this 50-day EMA crosses below the 100-day, you don't know how long or how far this decline is going to last. And in this example, you can see that that Merck stock in this time period was on a sell signal for quite a long time. So if you simply exited your long positions here at around the 42.50 level, then you would have saved yourself a lot of pain because the stock eventually went down to 22.5. So you would have gotten out, saved yourself a lot of pain, and you really don't want to take long positions until this 50-day EMA crosses back above the 100-day EMA. So at this point, you don't know how long this decline is going to last, so you simply exit your long positions and save yourself a lot of pain. So this 50-day, 100-day EMA system is also helpful in preventing losses. Okay, so once we determine the price trend, and the next step would be to find the best profit opportunities out of those stocks. Let's say that we compile a list of stocks that are on a buy signal. So we want to select from that list the best profit opportunities. And the way we do that is we confirm the price trend. And we use several confirmation indicators. We use on-balance volume, which measures volume flow. We also like to check the new 52-week high list and also check the industry group for the stock, because a lot of times more than half of the price movement of any stock will be dependent on its industry. So we want to be in the industries that are performing the best. Like right now, the best performing industries would be utilities, consumer staples, and retail stocks. And right now, if a stock is in that group, the odds are it's doing well. So that gives your stock a real tailwind when it's in an industry group that's performing well. So the way the on-balance volume indicator works is when a stock closes up, volume is added to the on-balance volume line, and when a stock closes down, volume is subtracted. So a cumulative total of these additions and subtractions form the OBV line. And here's an example. This is for Riverbed Technology. On the top here, we have the daily price movement of the stock, and in the chart below, we have the on-balance volume line. And we're not looking for any specific number or parameter with this on-balance volume line. We simply want to see this sloping up. And if it's sloping up, then it's confirming this price uptrend, and this volume flow will help sustain this price uptrend. So we just simply want to see this on-balance volume line sloping up. And here's a price chart for Apple. We see the 50-day EMA is above the 100-day EMA, so we're on a price uptrend or a buy signal. And this price uptrend is confirmed by an upsloping OBV line, which is in the chart below here. So we can see this upsloping OBV line, which confirms this price uptrend. And if we have an upsloping OBV line, that's an indication that volume's heavier on days that a stock closes up, volume's lighter on days the stock closes down, and that the buying pressure is exceeding the selling pressure, and that this volume flow will help sustain the price uptrend. And another indicator we use is the new 52-week high list. And in my experience, stocks that make this list, in other words, they're trading at a new 52-week high price on today, then that means that that stock, the odds are that's going to continue to perform well. Once they make the 52-week high list, it confirms the price trend, and these stocks tend to continue this price uptrend. And so this is a great source. And the stocks that are included in this new 52-week high list represent the very best profit opportunities available out of the universe of 6,000 or so common stocks. So plain and simple, the stock will not make this new 52-week high list unless it's in a very powerful price uptrend. So this is also a real good trend confirmation indicator. And if the stock is making a new 52-week high, the odds are it's going to continue that price uptrend. So it further confirms the price uptrend. And here's an example, a snapshot of the new 52-week high list, and this lists the stocks and the symbol, and of all the stocks that traded at a new 52-week high on that particular day. And this 52-week high list, by the way, is available on the Trade Monster site. And it's also available on barchart.com. And if you log on to barchart.com and just select stocks, and in the upper links up here, and then on the left column, just select 52-week highs, and it'll display this 52-week high chart. So this is also a great place to start your trade selection from this 52-week high list, because all these stocks are in very powerful uptrends. Otherwise, they would not be on this list. So this is actually a great place to start your analysis.
Chuck, do you view the list on a weekly basis? Do you have a certain day that you like? Is it just kind of random? How does that work for you?
Yeah, that's a good question. I usually check this almost every trading day, Tom, and I get a really good feel for the market, because if I see a stock is on this list several times over the course of several weeks, then I know that that's a good candidate, and I'll actually write down the name of that stock and I'll start tracking it. And so I normally check this every day. And also, when you start checking it, you get a feel in general for the market, because you'll see stocks in certain industry groups, like let's say retail, that keep showing up on this list. So you know you want to focus on that retail sector or that retail industry because it's performing well on a relative basis compared to all other stocks. So this gives you a really good feel for how the market's trading if you check this a couple times a week. Okay, and then our third step in our technical analysis is to select an entry point. And I found over the years that the best way to select your entry point is to simply look at the Keltner channels, which are overbought, oversold indicators. And this is a great tool to help you time your trade entry and select a lower risk trade entry that gives you a higher probability that your trade's going to be profitable. And so we want to use this if we're looking to buy a stock, or if we're looking to buy a call option. We also want to use this to help time the entry of when you buy that call option. It's the same is true for if you want to take a bearish position. You also want to check the Keltner channels. And if you're thinking of taking a bearish position, let's say there's a stock that's on a sell signal. The 50-day EMA is below the 100-day EMA, and you're looking to short a stock or buy a put option, then you want to check the Keltner channels and see when that stock becomes a little bit overbought. That's when you want to put on your short position. So it works both ways for both long and short positions. And here's a snapshot. This is the daily price movement of Apple stock, and we have the upper Keltner channel, the middle channel, which is this dotted line, and the lower channel here. And this acts as an overbought, oversold indicator, and you can see whenever Apple stock trades above this upper channel, it's getting overbought, and the odds are it's going to retrace. So, and you can see each time it got up near this upper channel, it retraced back down to the lower or middle channel, and you can see in almost every case. Here it was trading above the upper channel, retraced back down to the middle. Here it went up above the channel again, retraced back to the middle. So you can see every time it gets above this channel, gets overbought, there's usually a retracement. So what you're looking for is to buy a stock or buy a call option when the stock is trading near the middle channel, which is the dotted line, or this lower channel. And you don't want to buy the stock when it's up above the upper channel, because it's already overbought, and the odds are that stock's going to correct. So you want to be patient and try to buy when it retraces back to that middle or lower channel, and that greatly increases the odds that your trade's going to be profitable. And what I did in this snapshot is I showed you my brokerage confirmations that show purchase of Apple stock. On November 4th, I bought 400 shares. December 9th, I bought 100 shares. February 16th, I bought 400 shares. And then what I did was I circled on the price chart the time frame when I bought these shares. And you can see I bought the shares in this first example when the stock actually was trading above the upper channel, retraced back towards the middle to lower channel. So I bought right in here. And then I also bought right in this time frame, and then again over here. And you can see with each one of these purchases, the stock really didn't drop much from my entry point. So by using the Keltner channels, I was able to get a lower risk entry, and you can see the stock really didn't retrace much from my buy points here. So that's just an example of actual trades I took using these channels and how they allowed me to get a lower risk entry point. And then, as I mentioned in the beginning, we have what I call high probability buy signals, and they don't occur that often, but when they do, it usually sets up for a very powerful rally. And here's an example. This is for Baidu. You can see right here, Baidu stock, it's in a price uptrend, but it closed below that lower Keltner channel, which usually sets up for a very powerful rally. So I also showed my brokerage confirmations for that day. That was December of 2010, right here, when December 20th of 2010. So I bought Baidu when it closed below this lower channel at $98 a share, $98.16, and then of course the stock started a rally after this, after it became very oversold and actually closed below that lower Keltner channel. Started a very powerful rally, so this produced a nice profit. So this is just another example of using the Keltner channels to get a low risk entry. Here's another example of a high probability buy signal. This is for Chevron, blue chip type stock, but it rallied 45%. That's a pretty big move for Chevron. It rallied 45% from this oversold condition here, where it actually closed below this lower Keltner channel. So big move after this high probability buy signal. Here's another one for Caterpillar, had a 85% rally after this high probability buy signal. Tesoro, 72% rally after the high probability buy. And here's another example. This was March of 2011. The Apple closed below that lower channel, creating a high probability buy. So I bought 100 shares at 333, another 100 shares at 333.01. So again, I was using these channels to find this low risk entry, and you can see that Apple really didn't retrace after this high probability buy signal, and that turned out to be a good entry point. So I took a snapshot, I think it was yesterday or the day before, of my super portfolio stocks, and I'm going to show you two accounts here, and this is just the open trade profits as of yesterday or the day before. I have $326,000 in open trade profits and average return of 38.9% for these super portfolio stocks. So that's current real-time results. And also with my advisory service, I have, this is a snapshot of the stock portfolio. I believe this was yesterday. These are mostly super portfolio stocks. There's one or two growth stocks mixed in here that we've held for a long time, but for the most part, this is full of those super portfolio stocks that are doing well in this type of environment. So as of yesterday, we had $195,000 open trade profit, average return of 104%.